So on my channel, I talk a lot about single family homes, and from time to time I do get asked the question, Kris, why not multifamily? Dude, why aren't you collecting doors by doing fewer projects with a lot of units attached to it? And so today I thought I'd make a video on the difference between single family and multifamily and where I actually put my money that most people don't know.
One shot, now the future is yours. Go!
All right, check it out. So in today's video, we're gonna talk about the difference between single family and multifamily. And I know what you might be thinking, come on, Kris, isn't this an easy argument? Single family, Kris, that's where investors get started, right? Like it's low entry point, you don't need nearly as much money, it's kind of easier, right? But once you start rolling in the dough like a baker's knuckles, aren't you supposed to graduate to bigger projects like multifamily? I mean, I kind of think that that's what people are doing. And I'm gonna tell you right now that the issue is far more complicated and most people don't understand the stats that I'm about to drop on you right now. So in 2024, Realtor.com came out with a really important article. And here's the bottom line of it. They basically said, we don't have enough single family homes, but we have way too many multifamily. And here's what I want you to understand. Supply and demand is what really runs the real estate world. For example, when there's demand for 1 million homes and you don't have enough homes, guess what happens to the price of homes? It goes up. But imagine that we have no demand for homes because we already have enough, but we've overbuilt 1 million extra homes. What's going to happen to the price of that real estate? Well, real estate is only worth what someone's willing to pay. And if no one's willing to buy it because nobody needs it, then it's going to go down in value. So bottom line, the price of real estate has to do with supply and demand. And Realtor.com came out and basically said that if you take a look at what we've seen in the shortage of single family homes between 2012 and 2023, over that 11-year gap, we're now missing an estimated 7.2 million homes. In other words, we have not produced enough single family homes. For population and migration, we are missing 7.2 million homes. However, they also state that on multifamily, we currently have too much. So before we even get into the argument of what I like better or what I'm doing between single family and multifamily, understand this core dynamic. If we don't have enough single family homes, we're gonna see that the prices are going to shoot up in value. And if I have too much multifamily, we're gonna see those prices drop. Well, if single family goes up and multifamily drops, that's going to affect, for me as an investor, a core number called ROI. Stands for a return on investment. And your answer on which of these two you should invest in really shouldn't come down to ease or convenience or knowledge. It should come down to ROI. In other words, which one makes me the most money? And at the end of this video, I'm going to tell you which one does that. So there are 6 different criteria that I want to talk about today for really comparing single family and multifamily. And the first one has to do with economies of scale. And economies of scale has to do with this. If I want 10 doors in single family land, I've got to buy basically 10 single family homes. And then I need to property manage 10 different single family homes that are scattered throughout the valley. But if I have a small multifamily complex with 10 doors, I can have an on-site property manager, that's going to reduce fees. And the building, I put all 10 of those single families into one building, and that building will actually come down in price, and the price per door is going to go down. And so all of a sudden it's like, wow, that might be more economical, and it might be easier to scale multifamily. And right now, if we're comparing single family to multifamily, you are right. Scaling multifamily is way easier than scaling single family. And for that reason alone, a lot of people invest in multifamily versus single family. Except I want you to wait for the end of the video because there's a little bit more to it. You know what they say, better is always different, but different isn't always better. Number 2, cash flow. Let's talk about single family versus multifamily. While single family homes are easier to finance and have lower upfront costs, their cash flow per invested dollar typically is lower. And I would say that that is true for most investors. Please also bear in mind that the average investor is making like 12% a year on their money in real estate, and I'm making in the 30% range. So there's a difference between being a novice versus an expert. Because side-by-side comparison really does yield. In multifamily, it's a different game. Multifamily properties often yield higher cash flow due to economies of scale. Even though the initial investment may be higher, consistent cash flow from multiple units helps mitigate risks during vacancies. I will tell you, however, that if you invest in the top rental markets or if you're doing something like a lease option, you can usually produce a cash flow that will kick the butt out of multifamily. And when you're calculating the ROI, cash flow usually accounts for a very small portion of the overall ROI. So in this case, let's even just say that multifamily wins, but let's let that just be one piece of the jigsaw puzzle on our journey to figuring out which is best. Number 3 is appreciation. Now, appreciation is a really big deal because over the last 65 years, the average single family home has appreciated 4.65% year over year over year. And if you've only put up a fifth of the money because the bank put up the rest of the money, you can take that number, multiply it by 5, and now all of a sudden you're probably earning over 20% a year on your real estate if you've bought it in the right markets. Well, here's how it pencils out for single family. These homes tend to appreciate better than multifamily properties. Their prices are influenced by comparable sales or comps, and they're often sold to owner occupants. Versus multifamily, while appreciation may be slower, multifamily properties offer other advantages like cash flow and diversification. So right off the bat, we saw during the pandemic that if you owned a median priced home, that over the course of 18 months, the median leapt up $100,000. And maybe that was 25% of the value of the property. So it was a $300,000 home, now it's a $400,000 home. Well, in multifamily, that does not mean that a $1.5 million property became a $2 million property. Prices are normally reflected by supply and demand like we talked about earlier. So on this one, definitely a big point to single family. Appreciation on a bunch of single family doors, that right there alone could make the difference of millions of dollars. Number 4, let's talk about management of the premise, because management on single family is definitely going to look very different than multifamily. Active management on single family is common for single family homes. It's great for beginners because you can say, you know, I'll be the landlord myself, I'll take the calls, I'll repair the thing, or I can just call a local property management company and say, charge me 10% of gross rents, and then you guys do all of that work. And it's a pretty easy operation. It does, however, look different on multifamily. Multifamily properties require more management, but they can yield magnified returns on investment due to multiple revenue sources. Bottom line, multifamily properties require more management. And so usually if it's a large enough premise, you literally have someone living there, maybe they're getting free rent and they're now the person doing the repairs for the entire units. These people, because they're not in single family homes, are often more in the renter's mindset. And renters, bottom line, they complain more, they need more things fixed, they break more things. And that just kind of goes with that type of style. On single family homes, I'm usually buying a home in a range where my tenants are making over $60,000 or $80,000 a year. They have a much higher likelihood of taking care of the home, or I can do a lease option, which is like a rent to own, where now they are vested into the property and where they want to take care of it. And so repairs do tend to be lower. And with multifamily, you do have more turnover, right? I mean, these are families living in a multi-unit that would like to get out and actually have access to a single family home. So it's more of a stepping stone. You're going to see more turnover. Number 5, we need to take a look at risk because there is exposure when you're doing single family versus multifamily. With single family, during economic downturns, single family rentals are more exposed. A vacant single family home means 100% vacancy. So if I have a multifamily property and I've got 10 doors and I've got 10 of them rented and then I have a vacancy or two, it's not that big of a problem because I have all the other rents that are offsetting it. If you have a single family home though, and all of a sudden the people move out, well, now you have to carry that entire burden. And comparatively speaking, the door on a single family home is a lot more expensive than the door on a multifamily property. Now, in juxtaposition, on single family, let's say I have 5 homes that I own versus a 10-door unit. And it's like, okay, you're right. If I have 1 or 2 people move out of the houses, then that's big exposure. If a couple people move out of the multi-unit, it's not as big of an exposure. And finally, number 6 is that if you're going to get in the single family versus the multifamily game, you do have financing options that vary greatly. With single family, bottom line, it's just easier to finance. It's easier to get in the game, so it's easier for beginners. With multifamily, there's various financing options that are available for multifamily properties, including multifamily loans with advantageous terms. You do need to understand, however, that when you do multifamily, you have to often put a more significant down payment. Like, it's very predictable on a single family home that if you're not going to live in it, it's a 20% down. If you are going to live in it for a while as a primary residence, it might be 0 down or 3% or 5% down. And so again, it's an easier entry point, right? Like getting into a single family home might cost me 10 grand to $80,000, but a multifamily, I may have to come up with hundreds of thousands of dollars or more. And for beginners, that's not necessarily an easy way to get in the game. Notice in this entire video that what we did was a comparison analysis using words, but your ultimate decision actually comes down to one thing, a number, and that number is called ROI. It is your return on investment. And I'm going to tell you right now that often when I look at multifamily, I can get them to produce an overall return, usually between 18% and 25%. When I do single family homes, I won't look at a property unless I'm at least earning 25%, and sometimes it's 40%. So a lot of people have asked, Kris, like multifamily would be a lot easier for you to scale and look at the advantages. But for me, I say, well, real estate is about performance on my money. Real estate has enabled me to travel the world and visit 50 different countries. Real estate has enabled me to live in mansions and to drive really incredible cars and do really cool memory makings with my family. And single family outperforms multifamily in overall ROI. Now, here's why it's significant. You might say, well, Kris, what really is the difference between 25% and 35%? You know, if I can do a multifamily deal and earn 20%, and let's just say you're even just doing 30% on your single family, like, is it a big enough difference to really matter if after all, it's easier to scale multifamily? Well, I want you to understand this. Imagine having $50,000 sitting in a 401k or an IRA. On the 30-year average, you're earning 6%, which means over 20 years, it'll triple. That 50 grand will become $160,000. If you put it in real estate earning 25%, just 19% more, over that same 20 years, it doesn't just triple, it makes 27 times more money, which means that the difference between 20% and 25% is astronomical if it's compounding, or the difference between 20 and 30% is huge. In my conscience, I can't justify putting my money into multifamily because even though it's easier, it's lazier. Because bottom line, it just doesn't make the money. Now, people will say, but it's more scalable. And to that I said, yes, but if you know, like an expert, how to scale, does it really matter? Which is why people all over the world watch social media videos just like this and say, okay, Kris, can I partner with you and use your scaling system and we just split the profits? And when they do that, they end up making a lot more money than multifamily or a lot of their other options. If you want to know how to crush it in the game of single family real estate, more importantly, if you want to partner with someone who's at the top of their game and bigger than anyone else who's ever scaled single family, that would be me. I've done over $2 billion on 6,500 single family homes. And if it doesn't make 25%, I won't touch it. Trying to get multifamily to consistently produce 25%, now that's a huge challenge. And there's a ton of deals that are never going to work out. So bottom line, if you're watching this video because you want to know how to make your money really perform at the highest level possible, click the link below and let me show you what it would look like if I did 100% of the work for you and we split the profits. If you like the sound of that because it is easier, it is more convenient, but it also makes more money, click the link below, fill out your information, let me and my team be in touch with you. Let's consider the possibilities of building a real estate portfolio together. Okay, Kris, I got it. Single family's where you're putting your money, but what about the stock market, dude? Like real estate versus the stock market, if you're smart, Kris, you diversify, right? Like you got to have money in the stock market. And if you want the answer to that question, you need to watch this video right here because we're going to do a side-by-side comparison. We're going to see which one's better, and then we're going to find out what diversification really means.